asked an AI to make me rich, and it gave me the craziest trading strategy ever. I told Claude AI to act as an expert algorithmic trader and built a highly profitable Bitcoin strategy on the 15-minute chart. And honestly, what it came up with was actually genius. Look, we've all seen those garbage videos on TikTok and YouTube Shorts promising 1,000% return using two random lagging moving averages. I didn't want any of that hype. I pushed Claude to its absolute cognitive limits. I told it, you are a quantitative hedge fund developer. Give me a multi-layered momentum system built specifically for volatility of Bitcoin on the 15-minute time frame. And instead of crying about market random walk theories, I actually laid out a highly strategic triple filter momentum matrix. Let me break down the exact logic it coded into the bot before we look at how much money it made.
First, it uses the 50 exponential moving average as a macro trend filter. If the price is trading above the 50 EMA, the bot is strictly locked into buy mode. If it's below, it only hunts for shorts. This prevents the bot from fighting the market trend. Second, the actual execution entry is triggered by a highly responsive 9 and 21 EMA crossover. But Claude didn't stop there. It added a third layer, an RSI momentum sweet spot. It will only buy if the RSI is above 50, showing its strength, but strictly below 70, meaning we aren't chasing the pump at the absolute overbought peak. It sounds flawless on the paper, right? But transferring this mathematical blueprint into a live running script on TradingView turned out to be an absolute nightmare.
Here is the reality nobody warns you about. AI code is almost never perfect on the first try. When I first copied Claude's generated Pine script into the editor and hit save, the compiler completely broke down, throwing a massive wall of red syntax errors because of formatting and invisible spacing errors. TradingView couldn't read the variables. If you look right here at line 63, the script literally cut off midway through a math function, leaving mismatched parentheses everywhere. If I had tried to force this onto a live exchange, it could have triggered random orders or completely locked up my capital. So I had to manually debug it line by line. I fed the raw compiler logs back into Claude, stripped away a highly complex but broken custom UI table that was glitching out, and replaced raw hex color codes with clean native strings to make the engine stable. After a brutal hour of troubleshooting, we finally cleared the logs, clicked Add to Chart, and watched the algorithmic signals populate the chart with 0 bugs. Now, it was time for the ultimate test, the 90-day deep back test during one of the messiest market conditions in recent history.
All right, the data is locked in. The backtest has simulated every single 15-minute candle over the last 3 months. And here's the raw, unfiltered truth. On a standard $10,000 test account, the strategy closed with a total net profit of plus 128.29 USDT. Now, I already know what the amateurs in the comment section are going to say. Wait, a 1.2% return in 90 days? That's nothing. Statistically, those 500% flip accounts blow up 99% of the time. Let's look at what this AI actually accomplished from an institutional risk perspective, because this is where it gets crazy.
Look closely at this benchmarking metric right here. During these exact 90 days, the Bitcoin market was in a brutal downtrend, heavily bleeding out. If you were a regular retail investor using a classic buy and hold strategy, your portfolio would currently be sitting in a painful 6.96% loss. But look at the AI's equity curve. It completely broke away from the market trend, outperforming a standard Bitcoin hold by over $1,084. While the general public was watching their capital evaporate during the market dump, this automated script safely navigated the waves and kept the entire account green. But how did it do that? Let's address the massive elephant in the room. The win rate is only 45.45%. Out of 33 total trades, it lost 18 and only won 15. Mathematically, it lost more times than it won. So, how on earth is the account profitable? Look at the trade distribution data right here. The AI's largest winning trade captured 144.66, while its largest losing trade was tightly restricted to just $84.47. This is pure mathematical genius. Claude didn't build a high win rate strategy. It built a strict risk to reward machine. When the bot is wrong, its trailing stop losses cut the losing position instantly. But when it's right, it lets the win run straight into our dual take profit targets. Look at the safety matrix. A tiny maximum drawdown of only 3.53%. And check this line at the bottom. Margin calls, 0. Your account was never at any point in danger of liquidation. It traded with the cold, calculative discipline that 99% of human traders completely lack because of fear and greed.
So, what is the final verdict? Can AI replace a human trader right now? If you are looking for an automated system that acts like a highly defensive, risk-managed hedge fund, protecting your capital during terrible market crashes and is slowly expanding your account, then yes. Claude AI proved that it can design a functional, robust system from scratch in just 5 minutes. But I'm going to be completely honest with you guys. This safe, defensive trading style is a bit too slow for my taste. It's great for a retirement portfolio, but on this channel, we like to push the boundaries of technology. Which brings us to part 2 of this challenge. I'm going back to Claude with the exact script, but this time I'm removing the tight filters. I'm instructing the AI to scale up the leverage, speed up the execution, and build a high-frequency, aggressive AI scalper. We are going to find out if it can improve our returns in a week, or if it can completely vaporizes the entire account. Hit that subscribe button and turn on notifications right now because part 2 is going to be absolute chaos.